Jerry Harvey, always interesting to listen to. Well, listen, we mentioned there one retailer, Kogan, that's been in recovery mode after overstocking warehouses during the pandemic. The online retailer runs a different model to Harvey Norman by not having physical stores that can be revalued. Losses at Kogan did double in this interim period, but Ruslan Kogan thinks the worst of its troubles are behind it. I caught up with him earlier this week.
Well, yeah, we had an inventory issue. We had an incredible half through COVID. We were there for customers when they needed us most. We were able to deliver a whole heap of goods, and we made the incorrect call that was going to continue for a while. So we stocked up. We went from having 12 distribution facilities to 40 within the space of a few months. Now, that meant that we ended up being overstocked, and we've had to clear through a lot of inventory. So we've had a pretty challenging year, and we called it out about a year ago. We said, hey, it's going to be challenging. We've got to clear through inventory, and we've done that. And in January, I know it's 1 month, that's not a trend yet, but we have returned to profitability and seem to have fixed a lot of those issues.
Okay, so just explain what happened, because sales have dropped in this half as compared with the previous month. Is that the clearing of the stock, or is that actually a change in consumer behaviour?
There's a bit of both. There's obviously, so we were clearing stock. We had too much inventory. There's a lot of discounting, but there is consumer behaviour is changing. People are definitely seeing interest rate rises. Things are costing more. The energy costs more, petrol costs more. So there's definitely softness from the consumer. But from our perspective, because we're all about value, we're all about better prices, we think that, historically that's been our time to shine. Whenever consumers have done it a bit tougher and they do a bit more research and they compare prices, read reviews, we win market share in that scenario.
Okay, so how much of it do you sense is actually due to the fact that people just stocked up on televisions and kitchen gear and everything else during the pandemic, and all of a sudden now that's all over and they just don't need that stuff for another couple of years?
There's definitely a portion of that. It's hard to quantify, but the areas where our business is strongest are those items that make being at home a lot more comfortable. It's your LED TVs, washing machines, air conditioners, vacuum cleaners, air fryers, and so on. So we were definitely there for customers when they needed us most when lockdown started. There was some pulling forward of demand, but that's now 3 years ago. So TVs are now much better, washing machines are much smarter, air conditioners are much smarter, and so on. So there was definitely pulling forward of demand, and we expect, as the economy isn't doing too well at the moment and people are tightening their belts, more people are going to be spending time at home and wanting that to be more comfortable as well. But this time around, they're going to be a lot more budget conscious. So
okay, so tell me about that, because tell me about the Kogan brand itself. I mean, when you entered, you were the maverick, you got the cheaper goods out of China, all that sort of stuff. But I wonder, to what sense during the pandemic were people going to the branded goods, to the televisions, the Sonys and the Samsungs, and going to those sort of premium goods as compared with the Kogan brand?
Well, we are a value-based brand. So we're now, the business is 17 years old. We've been working with the biggest manufacturers around the world, making the private label products and those big ticket items. But throughout the pandemic, the exact opposite of what everyone initially thought would happen happened. Whereas we initially thought, there's turmoil coming. People and consumers were more cashed up than ever. There was no real reason to do a lot of research or to compare specifications and read reviews. All the high-end retailers would have seen even the most expensive products all sell out. So that's where it's a bit different this time around, because it's openly now, a lot of people are saying, hey, we're doing a bit more research. We're going to open a few tabs. We're going to compare prices. This may be a brand I've heard of before, but look at the reviews that this product has, So there's a lot more of that, and people are becoming more frugal. We saw it happen in 2008. We saw it happen through other times when the economy has slowed down. So people will think twice about how they spend their money.
Okay, so you're famously an online retailer, whereas, say, for example, this week we've seen Harvey Norman come out. Sales similarly are starting to ease off, but they've also got that big property portfolio where they go and put a Harvey Norman box on a piece of property and immediately the value of that property rises. You tend to miss out on that uplift in your business model. Is that something that you regret missing out on or not?
Look, there's different advantages to different business models. You know, one advantage for us is that we get to really understand what our customers want, what are they looking for, how they browse our site, what items are popular, what's going to be trending, how to allocate capital to inventory and so on. So we get that advantage in our business. Bricks and mortar has different advantages. Like, we don't get to see a customer face to face online. We don't get to have a chat to them, ask them how their weekend was, really understand, you know, what sort of product they're after. So it's a different business model. If we sold coffee, our customers can't smell the aroma of the coffee as you would in an Nespresso store and so on. So it's got different advantages, and you know, we flaunt our advantage and are there for our customers, delivering really good value with digital efficiency, driving prices down. But other business models have their own advantages.
Okay, are you worried this year that there is a real brick wall coming for consumers with high energy prices and the ongoing interest rate rises, that at some point the savings run out and they hit that brick wall, as it were, economically and spending-wise?
We'd love the economy to be doing as well as possible, right? We'd love consumers to have as much disposable income as possible and for everyone to be really happy. But the facts at the moment point in a different direction. They say there is a slowdown coming. People are tightening their belts. They're watching their expenses. Typically, our business wins market share in that sort of scenario, because if every customer tomorrow started every shopping journey by opening their laptop, doing a bit of research, reading reviews, comparing prices, doing all of that, we would win massive market share. So while we do want everyone to be doing as well as possible, we welcome an environment where people will be more frugal.
Okay, so can I ask you personally about your own personal circumstances? You set this business up, you were the maverick. When the share price was much higher, you took almost $200 million out of the business, as it were, selling shares. Does that take away the incentive to run this business as vigorously as you always have? I mean, have you got the same passion, the same hunger?
I'm the biggest shareholder of the company, so we're in a very competitive space. Makes me jump out of bed in the morning. My name's on the door. If shareholders want alignment with a management team, you know, our board of directors are all significant shareholders in the business in terms of, you know, what the board owns in the company. So if you want a management team that's got skin in the game, if you want a management team that's, you know, in the trenches with the shareholders, that's what you get at Kogan.com. It's I'm here for the interview, aren't I? So
yeah, well, that's true. But I'm just wondering about that. Just as a person, you know, you're suddenly set up for life, and whether that does take a little bit of the edge off. You know, they sometimes talk about golfers having that situation. I'm just wondering about a chief executive in the same way, a founder.
I'd let you have a chat to my wife, and she can explain to you whether I work more or less now.
Ruslan Kogan, great to chat to you. Many thanks for your time.
Good stuff. Thank you.